Welcome to Illuminati Silver. We tell the truth about silver. Today is Sunday the 9th of February 2020 and we're providing our gold and silver price forecast for this year and the reasons behind our projections. Now last year when we produced our gold prediction for 2019, which admittedly was much later than this prediction, we concluded that gold's high would be between 1600 and 1700, and by the year end we're expecting gold to fall back to 1550 to 1600. Now it is rare for us, but we were actually a little too bullish. Gold's peak actually reached 1546 and ended the year on 1517. It did actually manage to spike to 1611, but that was on the 8th of January of this year. So we were just out by a little over a week from predicting gold's high for the year accurately. Having said that, we were much closer to the mark than those so-called experts who were predicting anything from $2,000 gold to $10,000 gold at the extreme. But as the saying goes, that's now history. What excites and interests most people within the precious metal space is what is going to happen to gold prices in 2020, and is therefore the purpose of this video podcast today. Now, we published a video on Tuesday the 27th of August last year where we put what we regarded as an extreme potential case, and it was entitled $1,800 gold and $22.50 silver in 2019, Is This Possible? And we have placed a link to this video in the description box below. Now in this we pointed out that there was outlying potential for both gold and silver to reach these levels, and we quoted the reasons why, which included: 1. We have the bond market sending a signal that the US and many Western countries are moving towards a recession. The inverted yield curve announced last week is often a strong indicator of that happening. 2. Strong demand by emerging markets and especially their central banks. 3. Brexit uncertainties in the UK and their impact on Europe. 4. Italian political and economic difficulties. 5. Issues with Iran. 6. China-US trade war. 7. Potential US-Europe tariffs. 8. Fed changing course, reducing interest rates, but will face problems as the amount they can reduce rates by are limited. 8. Portfolio managers are readdressing their strategic asset allocations and some are moving in favor of gold. 9. Mixed financial results from major companies and volatility of stock indices from what has been all-time highs. And 10. President Trump's Twitter feed also having an impact. Now, this video was basically created to highlight what could potentially happen given the set of circumstances all basically occurring more or less at the same time and proving detrimental to the underlying economy. Now, not all of these things happened negatively, and the impact from them to a large degree was relatively moot in comparison, which is why, although gold strengthened during the year and performed well, up some 19%, it did not reach anywhere near the level the pumpers were advocating, nor to the extreme level we stated was a possibility, though very unlikely. So what has happened since then? Well, the recession, which the inverted yield curve suggested would happen, now appears unlikely, at least for 2020. Brexit is almost sorted, though of course it won't be absolutely finalised until the 31st of December. Iran has quietened down but not gone away. The Fed has signalled 0 rate cuts this year, though we actually estimate that there will be one. US-EU tariffs are still a possibility. Central banks and some emerging markets are still buying gold, and stock markets have reached numerous all-time highs and are not that far off from them even today. Now, taking all of this into account, it would not then be regarded as outrageous to suggest that gold will move within a similar band over the next year in a similar fashion to that experienced in 2019. But that is except for a couple, well in fact a few, key factors. 1. The coronavirus poses a significant and substantial risk to global trade and free movement of peoples, unless the virus is contained, isolated, and then eventually cured or eliminated as soon as possible. 2. The Fed has embarked on substantial liquidity support into the repo market, which has been extended yet again. And yet, no one, not even the Fed, knows what the ultimate magnitude of this support will be and the ultimate effect it will have on its balance sheet. And 3. Europe is actually teetering on the brink of recession, and Germany, traditionally one of its most powerful nations, is suffering considerably too. And their situation is not going to be helped if China and its demand and supply is adversely affected by the coronavirus for some time to come. We also do not know what sort of a trade deal the UK and the US can come to terms on, and especially when there is already a significant dispute between the two using the Huawei company for its 5G broadband implementation. So none of this serves well for increasing trade and global demand. Now, in addition to all of this, we also have to factor in the presidential election in November and the turmoil this could cause, certainly before the election takes place, and whether there is a strong likelihood or not that Donald Trump will receive a second term. Now, there are many experts out there calling for significantly higher gold prices in 2020, often quoting some of the following reasons. A fragile global economy. Stock market bubble has to burst. It's not sustainable. Further interest rate cuts will be necessary. Look at the ECB and other countries already possessing negative interest rates. The dollar is too strong to survive. Gold is trading at a discount looking at the traditional Dow to gold ratio, and geopolitical turmoil will continue with Iran. It's just quiet for the moment until further retaliation occurs. And so, as a result of these factors, or potentialities, we have the usual suspects, and we won't name them, but you know who they are, predicting a guaranteed $2,000 gold, but more than likely $5,000 gold figure by the end of the year, and some at $10,000. But more serious analysts, such as TD Securities, actually predict $1,600 gold by the year end. Goldman Sachs predicts $1,700. Bullion by Post potentially sees it rising to its all-time dollar high of $18.96. And perhaps the most bullish of all, the long forecast predicts a high for gold this year, closing at $19.57, but actually spiking to $2,055, with even higher figures by a few $100s in 2021. On the more cautious side, we have Berenberg Bank, which predicts a 2020 gold forecast actually lower than the current price at $15.25. Capital Economics actually believe that gold will lose steam this year and will see its price collapse to $1,400 by the end of the year. Ross Norman of Sharps Pixley, who won last year's Palladium survey, was the most bullish of this year's survey respondents, predicting an average gold price of $1,755 for 2020. That's an average, not high or low. By contrast, Bernard Dada, last year's winner for his silver and platinum predictions, is the most bearish of the survey's respondents and foresees an average gold price of $1,398 for the year ahead. In addition, the LBMA have recently published their forecast and calls for an average gold price of $1,550 in 2020. So we have quite a divergence of opinion here. Now, the one thing we can say with some degree of certainty is that we should all forget $10,000, $5,000, $4,000, and even $3,000 gold. However, as an outlier, we would not completely rule out $2,000 gold, especially if the coronavirus is not contained, or if the Iranian situation actually becomes substantially more active and serious. We also have to factor in the fact that if President Trump happens to be facing a potential defeat prior to the election, it would not be beyond imagination to suggest that he may deliberately cause some international incident to help his ratings, and so this too could lead to a higher gold price in this region. But that said, it looks for the moment that Trump is on the path to election victory, and such measures may not be needed. So taking all of the financial data into account that we have at our disposal, including the use of technical analysis, and attempting to factor in potential black swans and erroneous geopolitical crises, we at Illuminati Silver can see this year gold moving between a low of 1400, or actually just above, and a high equivalent to 2012's high of 1791, just shy of 1800, but settling at the end of the year somewhere between 1650 and 1750, much depending in truth on who wins the presidential election. Now, that may be far more bullish than many would have expected. However, we probably wouldn't totally disagree with the LBMA's estimate of an average gold price of $1,550 for the year. Bearing in mind an average is just that, and it's perfectly viable to have a low somewhere near the 1400s and a high somewhere near the 1800s and still achieve an average of 1550. Most of the time, we suspect that gold will operate between 1500 and 1650. But we do think that the uncertainty at the end of the year, and also if President Trump is successful, he will have achieved this by having rampaging stock markets and very loose credit, which will eventually have to correct itself, and thereby causing the dollar perhaps then to start to decline and gold and silver prices to rise. So that's our prediction. So on Tuesday, we will publish our estimate for silver. We were hoping to get this out tomorrow, but unfortunately it is a much more difficult calculation to make. A, because it has far greater volatility, but also because of its dual purpose. And we shall publish this video in the Inner Sanctum on Tuesday first, and then release it publicly some 10 days later. Thank you so much for listening. If you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they are published. Not forgetting, of course, to place your comments below. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.